Alright, so this should be working now. Perfect. Cool. So we're going to go ahead and get started here now. So we had day 1 already of our simulation session, basically trying to grow out this US30 account. Now this is day 2. So we've already taken a trade on day 1. We've already are down with that negative 1.91%. And so now we're going to skip over to day 2. So we started off on a Tuesday. We're going to skip over to day 2, which is that Wednesday. And I'm going to skip over to 5 o'clock PST, which is 8 a.m. Eastern Time. That's exactly when New York session opens up. So we're going to be trading this day, and we're going to do our entire analysis all over again now. Give me 1 second. Alright. Come on to the daily. I'm going to move this to the side here. I'm going to highlight all these things. All of our old analysis. I'm going to remove all of that. So then we can do fresh analysis coming onto the new day. Alright. Perfect. So we are going to start off on the weekly time frame. For the most part, the structure is quite bullish. We are at the moment kind of sitting in this little consolidation. So we have this weekly consolidation. I'm going to level it off right on those candle body highs with that top wick rejection on the current weekly candle. And then we also have the support that's being formed. So those are the only 2 things I'm going to mark off based off the weekly time frame at the moment. And that also narrows in my consolidation. So that tells me that when I drop down to lower time frames, what I want to look for is price pretty much approaching this area, wait for some sort of retest, consolidation, anything like that prior to a breakout, or I need to wait for some fundamental drivers at this point. So we're going to look at the fundamentals. We're going to see what kind of economic data we have coming out, if any, closer to the New York session or even the rest of the session. Coming on to the daily, we're sitting at these all-time high levels. So right into this. And we can narrow this down as we drop down to lower time frames as well. So we have all of this. Price is pretty much sitting here. We have a little bit of a top wick. We're breaking the previous daily high, so that tells us that there's still a little bit of bullish momentum here. But right now we're kind of flipping back down. So what I'm going to do is mark off the bottom daily wick right here. That tells me that if I'm looking for any scalping opportunities, this is pretty much my range. If I'm looking for any longer term trades, then I need this daily high to be broken, and then we continue to the upside. We can use higher time frames for take profit levels and things like that. Or we're looking for sells if this low here is broken, but scalps can be taken within this range right here. Come on to the 4-hour time frame. You're sitting in this consolidation. Within that consolidation, you still have this bullish structure formation right at these levels. So you still have price making those higher lows at each of these points, testing structure. We've had an insanely bullish momentum from this point of support all the way to the upside. It seems like we're getting a bit of a corrective move here. So same thing, before we're looking for any sort of entry, we need to see some sort of break and retest, some clear formations that we're ready to continue pushing bullish here, and then continue our movement to the upside if we are going to continue that bullish momentum. If not, we're looking for some corrective moves to the downside. And then the last 4-hour candle also shows us indecision in the market with price breaking the highs and the lows. That's that top wick rejection that we're seeing on the daily time frame right here. So nothing off of the 4-hour time frame to mark just yet. We come on to the hourly. We got a nice push up. We came right back into this range, gave us a little bit of a retest. We pushed up, breaking previous highs, but yet again failing to close above this area. So that tells us that that's a very strong level. We come back down, we're kind of sitting in this little bit of consolidation until we make a bit of a top wick, and then we start to see a bit of a more corrective move coming right into this 39,053 mark, and now we're starting to push back up. So here, before looking for any sort of buys or sells, what we need is, even for scalp opportunities, we would want price to break above this zone, and then we can look for our buying opportunities. We can also narrow in this zone a bit more and pretty much say that if price pushes into this area, this is what we're targeting for any buying opportunities. For any sells, we're looking for price to break our own low. So this 1 hour bottom wick rejection, price does that. That tells us that we have enough room to come back down. Anything in between, we're not really looking for a trade at all. We come onto the 30-minute time frame, and we start to see that even when you're looking at the candle formations, you're starting to see that the volume is dying down here, right? So then you have a little bit of volume, and we're just waiting for the market to open up. We're waiting for a little bit of more volume to kick in and potentially look for trades. But right now, we're still kind of breaking previous highs, so we're still very careful. What we want to look for is proper break and retest or proper entries at this point. What we can do, what we didn't do last time, is also open up the 5-minute time frame, which is the new entries that we have also been practicing in the group, especially if it's a high volume time. High volume time basically means that there's a market overlap, NYSE open, or if there's high impacts that are coming out. So we're gonna go up to a little bit of a higher time frame. We're gonna take all of this. Right into this area, and we're going to clone all this as we drop down to the lower time frames. So all this shows up on the 5-minute as well. We're only going to drop to the 5-minute to test the volume and to test any sort of potential entries when there's high volume times. With all that being said, before we start, we're going to take a look at the fundamentals. What do we have coming out today? So we have at 7:30, so in about 2 hours, 2.5 hours, you have crude oil inventories coming out from the US, which is pretty low impact. And then after that, we have the interest rates. So this is an interest rates day. What I personally do on a day like this is simply wait until interest rates are released, so about an hour before to 30 minutes before news comes out. You're potentially going to see the sentiment of where we headed. You're going to see the structure and things like that. In the live markets, that's how I trade. I know some people also like to take advantage of the volume right when the market opens up. So we can see if there's any sort of volume that comes out, let's in the next hour or 2 hours or so, then we will go ahead and look for entries. If not, we're going to call it a session at that time, and then we're going to come back about an hour or so before the interest rates are about to come out, and then kind of see where is market headed. That's the latter part is what I do in the live markets. What I'm also going to do here is skip over to the 6 o'clock candle, because that's how we also trade in the live markets here at 6 a.m. PST, which is 9 a.m. Eastern time. I like to come onto the charts 30 minutes before the stock exchange opens up. That's usually when I see a lot more volume. Alright, so here's the 6 o'clock candle. Now we're going to pretty much take a look at what's going on. You had a little bit of a break and retest, and now what we're looking for is, you can adjust some of these levels if you'd like. So instead of putting on more zones, I'm kind of making it clustered. Instead of doing all of that, I'm going to use the same exact thing, and I'm going to say that if I'm looking for any sort of continued sell opportunities, what I want to see happening here is price giving me a break and retest pretty much right below this area, some formation of this, or price continues pushing down, shows me that there's a lot of bearish volume to the downside and that we can break below this level here. So this is something that I want to be a little bit more careful of. If you're someone who doesn't really care and you're only going for that one-to-one, you can potentially look for a trade here. You can look for those continued sells to come all the way down here. I am projecting at this point, given that we are breaking below this area, we have enough momentum to potentially come back down and tap into this. But for my own risk management strategy and for the entries that I personally take, this is not an entry that I would take. If you were someone who didn't care and you had a different risk management strategy and entry strategy than I do, then you would pretty much just wait for price to give you a top wick, break these previous 15-minute low, and then just continue pushing down. So that could be another trade opportunity that you can take. I'm more interested to see what is price going to do after tapping into this area here. You can also drop to the 5-minute time frame to take a look at what's going on. You had that little bit of break and retest, but right now we're seeing that there's volume clearly, but we're waiting to see that on higher time frames. How does it look? So you want to make sure your entries are still using higher time frame confluence rather than just 5-minute or 1 minute. Those are lower time frames. They're going to have a bit more volatility. That's why you need to be extra careful when you're looking for those entries. If you guys want me to skip candles or anything like that, let me know. I can speed this up to 8. So even with that break and retest, we see how both of these wicks respect that area as the new as a new resistance. So that broken support, and we're trying to push back down. You guys okay with me skipping on this 15-minute time frame?
Yeah.
Yes.
Alright, so we skip. We close right at that level. And then we push back down. So now I'm interested to see what is price pretty much going to do in this wick area here. So now you have the New York Stock Exchange open. News-wise, you don't have anything coming out for another hour. So price broke the highs and lows. Again, volatility, indecision. If you're looking for any sort of entries here, what I would personally want to see is some sort of break and retest, some sort of bottom wick at least being formed, candle flips, continues bullish. Something like that is what I would be more comfortable taking an entry on. Even now, when price did push up, all we're doing is simply respecting this area, as you can see. So even if we did push bullish, we only came up to the high of the previous 15-minute, didn't really break that, came back down, made a bit of a bottom wick, so we're still, pretty much being very careful with our entries. And so now that we have rejected this, without having to put on more zones, we're still looking at this area as, can it respect this? Can it push down? As you can see, we're starting to push down. It seems like we grab liquidity from here and we're starting to push back up here. So still being a little bit more careful on interest rate days. I am a bit more conservative with my entries. When you come onto the 30-minute time frame, we got that liquidity. We're breaking these 30-minute highs, so we know that there is bullish volume here. You come onto some of the higher time frames, and then same thing here. You came back down, respected into some of these previous areas, and then starting to push back up once again. All of this is just giving me confirmation that there is bullish volume here, so we can look for potential buys. It's just waiting for all the time frames to pretty much align and give us the confirmations that we're pretty much ready to go. So even here, if price breaks above that level, we're gonna have this 4-hour candle flipping bullish and then breaking those highs. So that's another massive liquidity grab if that candle does that. So we know that we can keep pushing even higher and higher at this point. You have 9 minutes until this hourly candle closes, and then we're 30 minutes away from crude oil inventories coming out. I'm going to do next bar here, because before you even any sort of entry, we got that closure. The previous 15-minute also broke the highs and lows. The current one, if we are to continue bullish, I would want this candle to close above this zone and then continue to the upside. So we're going to skip here. I'm going to pause this real quick. We're going to analyze what just happened. So we have price pretty much pushing above that area, came back down, closed bearish. And so now you have the new 1-hour candle formation. So we're going to take a look at the 30-minute as well. 30-minute broke the highs and lows. We have that bullish momentum. That's that liquidity graph from down here. You come onto the hourly, same thing. We came up and tested the previous highs. You have a bit of a bottom wick right here, not bit, but like a huge bottom wick here, grabbing liquidity and pushing back up. So now if you're looking for any sort of, let's say we have the confirmation, first of all, we have the confirmation that there's going to be bullish momentum, right? You're going to be looking for those buying opportunities. Now what you need to look for is some sort of break and retest on lower time frames, or a bottom wick and then a push back up, and that's your volume to the upside. So that is when we would be dropping down to the 15-minute time frame, the 5-minute time frame, things like that. So as long as these candles are not breaking the previous candle lows, we're good for those buying opportunities. So here we have on the 5-minute time frame all those massive top wick rejections. We're still coming back and we're still closing right here, so we're not pushing any further down. If this 5-minute candle can respect the previous lows, break above this area, that would be a scalp opportunity that I would be interested in taking, potentially coming up top here. Let me know if you guys have any questions regarding any of this stuff here.
Nope, so far so good.
Perfect. Alright, we're breaking those highs. I'm going to come in with that 2% risk. Set a buy. Let's say we're just targeting somewhere in this range. I'll adjust that when I drop down, over when I go up to higher time frames. Pretty much saying that price should not be going any lower than this bottom wick rejection here, which is already the bottom wick of that previous 15. As long as we're respecting that, we're pushing that volume on the current 15. And then as of right now, I'm just going to leave this TP at the level that it's at, sitting at 1.89. If you want to make it that flat 2 to 1, you can do that. We can keep at any of these levels. But on higher time frames, we do know that there's much bigger ranges that we can go for. But before I do that, what I want to see is this daily candle also flipping bullish. If it does that, we've already broken the previous daily highs. We know that there should be no problem of price coming all the way up to the top here. But again, we're just going to be a little bit more conservative given the fact that we're sitting at all-time highs, right? And that is a weekly resistance level. So we're going to go with that 2 to 1 risk to reward on a 2% risk on this $978 account at the moment. Any questions about the entry?
Nope.
We can check higher time frames. 15-minute has cleared the previous 15-minute high, still respecting the previous lows. So we're getting a break and retest right here. 30-minute has already broken the previous 30-minute high as well. So same thing, we already got a bottom wick. We're trying to push back up. And this is the first 6 minutes of this 30-minute candle. So we know that there's already a ton of volume. And as you can see, it's breaking its own high and pushing. So we already got a 5-minute close. Broke all these highs here, closed right into this range. You got the new 5-minute candle giving a nice bottom wick, already breaking previous highs. Again, another confirmation of volume at this point. We're going to check the daily. The daily is almost flipping back up bullish, so we're still being a little bit more careful. I want price to reach into that zone before I increase my TP. So I want it to tap into the zone before I increase my TP. You got a 5-minute close right above that zone, pretty good. So that means we're breaking out of this consolidation. So as long as the following candles can just keep pushing. So on the 5-minute time frame, what you're doing is you're playing off of the volume. But instead of doing it on a 1 minute time frame, that's a lot more volatile and things like that. On a 5 minute time frame, you still have that 5 minute time period where you can still test out the volume, you can test out the volatility, etc. You're just being a little bit more careful, but your entries are not purely taken off the 5 minute time frame. Your entries are taken with a confluence of all these other time frames, higher time frames. So that's the key here, and making sure that you're not getting stuck, just trading based off the 1 minute, 5 minute time frames without a lot of volume or confirmations. We're about to get a 15-minute candle close here in just a few seconds. Alright, you got a bullish 15 close. The new one started forming. It's already bullish right off the bat. But still, you want to be careful because we're still in this range here.
I was going to ask, would you want to reduce your risk because of how the previous 15 closed? It still didn't close above the zone?
No, because it's already broken above all of this stuff and it's leaving a range. So I'm not really too concerned just yet because all it's pretty much doing is giving the following candle enough range to keep pushing. But we are approaching like a weekly resistance and all-time high level. So instead of reducing the risk, what I can do is just keep the TP at the same level. If this candle can cross above this and close above this area in the next 15 minutes or so, I would be comfortable, taking some partials. First, let's check. So we only have a penny lot, right? So instead of taking partials, what you can do is trail your stop loss or move to break even, and then instead of like having to move your TP, you can just keep it at this level here too.
Gotcha. Makes sense.
So that 15-minute gave you a nice bottom wick so far, and now it's starting to flip back up bullish. What we need at this point is this candle to keep breaking its own highs, right? That's confirmation of that continued bullish momentum. I'm going to skip here on the 5-minute time frame if everyone's okay with that, just for the sake of time. I do want to be able to get to the interest rates and see how the market moves there, or it's actually just already moving. So as you can see, this daily candle is also starting to flip back up bullish. So two things that you can do here: either you can let it hit your TP, or what you can do is increase your TP up a little bit higher. Let's say you did that at that point, right? So you increased your TP and you brought it, instead of keeping it right here, maybe you brought it a little bit higher. So right now I'm just going to use a little bit more conservative approach just to show you guys an example, right? So let's say it came a little bit higher. There's a very high chance that, price keeps reacting off of this, and then at the first sight of where we see price is reversing, we're just going to get out of the trade. But let's say if it keeps pushing, given that we already have a massive liquidity grab here and price is starting to push up from there, then we already have confirmations, then we can just keep our TP at that level, and then we come back, when interest rates news is about to come out soon. So even here, we're starting to clear all of that out. And you can keep doing this at every step, right? So you analyze, okay, what level has been broken, and you analyze the volume. One way is to see that price keeps breaking its own high. That tells you that price has a lot of bullish volume at the moment, and all you're doing is you're capitalizing off of that volume, right? So at each point, if you see that, okay, price has cleared above this minor resistance and you're starting to get closures on lower time frames and price keeps pushing, you can increase this TP from potentially this level to the next level. So if you come onto the 4 hour, from this level to the next level right here, right? Or even go a little bit higher. But I'm just being a little bit more conservative because it is an interest rate day that's about to come out. So I've increased it from this level to this, and this is where I would be comfortable with it at the moment. Alright, so you had a massive push up. That would be pretty much your decision if you want to increase your TP from that point. I don't. I want to keep it at the level that's at right now. hits TP with that top wick, flips back down. So even with that 2% risk that we took, we covered up yesterday's and we made more. So yesterday's trade, basically last week's, we had a negative 1.91%, off of our risk. And so that's how we closed out. We closed out with almost a negative 2% loss on our account. And then today, based off of this break and retest setup and playing off the market open volume, we came up with a 4% profit. So we made up the 2% from yesterday, and then we have an additional 4%. Now I would be off of the markets until about an hour before interest rates come out, about half an hour or an hour, and then I would analyze what is the market doing then. So I'm gonna skip, and we're gonna get to around 10 or 10:30. I'm gonna get to 10:30. In 30 minutes, you're gonna have interest rates coming out here. So we're expecting that we're going to maintain those interest rates. We're going to try to take into account, what was the economic condition at that time. So at that time, for the most part, we were just maintaining the same exact interest rates, right? And the thought process was we were still looking at the employment data. We had a lot more unemployment numbers, and the central bank was looking at also inflation data. So when interest rates were being maintained at high levels, we were starting to see a lot more optimism, because that means that the labor market hasn't gotten so bad that the Fed had to step in at that time. That was later into the year. But I think we got like a rate cut maybe a few months after this. But pretty much we're sitting at a high level where we had those interest rates. We can maintain them at these levels. And we are also combating inflation, which was one of the main problems, and that it was starting to come back down. With all that taken into account, there was a lot more optimism around maintaining these interest rates at a 5.5 level, high level. But there were also discussions of when can we see potential rate cuts, right? So that's kind of the sentiment that we're going to be playing off of for the next 30 minutes or so. Now, another thing that you can do is same thing. You can remove all of this, and then you can do your analysis once again. So now we have a lot more movements in the market. I'm going to pause this here for a quick second until we do our analysis. Now, based off the weekly time frame, same thing. You had a nice top wick rejection already to the upside. I'm going to drop to the daily, and I'm going to mark off the current daily top wick. That's the highest that price has been at the moment. I'm also going to mark off the candle body highs of these candles. So that's kind of my range. If I'm looking for any bullish momentum to the upside, that would be my first target. And then what I'm going to do is create a zone pretty much right at this level of where I know that this daily candle is going to flip back down bearish. So I like to mark these off for my daily and weekly candles, because that tells me that if this candle flips back down on a higher time frame, then we're looking for more of a bearish structure. So that's pretty much it based off the daily. I'm going to come onto the 4 hour, and this is where I'm going to start to adjust some levels if I need to. So I'm looking at these two. For the most part, it looks fine. The 4 hour already made a top wick. It's flipping back down. As of right now, this level seems fine as well. And then this zone, I'm going to bring this down a little bit more right underneath into this support. So you have that bit of a 4 hour consolidation that's being formed. You come onto the 1 hour, so the same thing. You have that massive bullish momentum. We got a corrective move. We've respected previous support areas, didn't really close below this area. Continue to the upside. So it seems like today, as we're getting closer and closer to interest rates, there's a little bit more of an optimistic sentiment, but we are still being very careful of sitting at all-time high levels, respecting weekly, monthly, daily levels, resistance levels. We're tapping into those. We're trying to break a little bit higher. Really don't have that momentum to do that just yet. So what I want to see is, can price continue to respect this area here as a support? And if it does, then, can we see some bullish momentum to the upside? First target being here. But let's say the Fed, for whatever reason, there's a deviation of the interest rates, and then also whatever Powell ends up saying at the press conference is also very important, because they're usually asking him questions regarding any sort of economic outlook. So you're going to see some volatility in the market around then too. So during that 1 hour time period, basically, I want to see what is price doing from a technical perspective. It should still be respecting these areas and simply tapping into them to just grab liquidity. So as long as these candles can close above the zone, we're pretty much good to go. We come onto the 30-minute time frame, all that consolidation, you get a little bit of a fake out, and then price comes right back down, and then we push back down. That's how we get, that 1 hour support being formed here. And then based off that 1 hour time frame, we also made up that bottom wick, but it seems like this candle is what's bringing us right back to the upside. And then you have the 15-minute as well. So we did close below, but it seems like we're pushing right back above this area. I'll be right back in 1 second. Perfect. If you guys want me to skip candles or anything like that, let me know. If you have any questions, also let me know. I'm going to skip here on the 15. Alright, so we had interest rates pretty much coming out here. I'm going to pause this real quick. News. So they maintained the interest rates. Now what's going on is the FOMC press conference. So now what we're going to look for is a better entry point. So right off the bat, it just shot up. Even if I was looking for an entry here, I would want a stop loss somewhere down here. That's a bit too much for me, a bit too wide. So instead what we're going to do is wait for a better entry. Either this candle, comes back closer to an entry point or something like that. Or we just wait for the next candle formation. So at this moment, there was a lot more optimism pretty much when they were maintaining those interest rates. So it's exactly how we expected. And then in 30 minutes, you're going to have Powell making a speech. Any questions so far?
Hey VJ, I was just gonna ask you a question out of curiosity because I don't get to attend the New York's live streams because I'm at work, right? But like, do you have like a threshold, like at minimum? Let's say you plan to take an entry after the news, like, do you do that like at minimum like 15 minutes after or 30 minutes, like depending on if there's a setup? Because in the past, I used to do these trades during the news, and I would get burned. So I took it upon myself to like not look at the markets at least at minimum at like 9 a.m. Eastern Standard Time is when I try to look for a setup because most of the news events come out at like 8:30, right?
Yeah.
Because that gives me, that allows me like to wait for like something to set. And normally, like after the news, if you wait like half an hour or so, there's setups that you're able to see certain. So I was just curious to know that, like, what's your approach when
It
you're
depends
doing
on
live?
it depends on the news that's coming out. So if it's interest rates, for example, I'm gonna wait here for like a few more minutes because, for example, like the next 5-minute candle might give you the volume to the upside so that you can take that entry. So here, for example, we can take an entry here. If it's interest rates, then I'm giving it pretty much 5-10 minutes or so. If it's any sort of economic data, PMI or something like that comes out,
CPI and stuff.
yeah. So CPI will react exactly when it comes out, so like 5:30 PST or 8:30 Eastern time. But something like PPI or like retail sales or something like that, I usually give it because it's 30 minutes before, or it's an hour before New York Stock Exchange open. And then there's also volume that kicks in at 9 a.m. Eastern time, so it's 30 minutes before a high volume time. I just give it that 30-minute time frame, and then I look for an entry right around when the market opens up and there's more volume that kicks in.
Got it. Well,
Alright, so we're going to look for a buy here. So even on a 5-minute candle, because it's high volume time, etc., the stop loss would be too wide if we kept it here. So instead of doing that, what I'm going to do is just wait for a better entry. In the next 10 minutes, you're going to have this entire 15-minute candle close. So we'll study that, see how pretty much that happens. And then we'll look for an entry on the following candle. And that gives you enough time because you're also about 15 minutes or so before Powell comes and he starts talking to the press. So all of this is great volume. It's giving that good confidence that we're going to keep pushing. But at this point, we have also broken those previous high levels. And so we're tapping into all-time high levels once again. But even for today, we're still up, 4%. Any questions so far?
No questions.
We have 3 minutes or so until we get the 11:10 close. So we got a massive push. We're starting to pull back a little bit. Alright, a few more minutes, and then we have this 5-minute close. Couple of seconds. Alright, that's a deep corrective move. That 15-minute, leaving a massive top wick at this point. And then now you have the new candle that's forming. So I'm just going to give it this 5-minute close. I'm going to wait for this 15 to close. See if we actually end up closing with a lot of volume. The next one can give me a bottom wick and push back up. So 5-minute, I'm just using that to pretty much understand what's the volume and which way, price is trying to move. So far we had that massive push up, tapped into those all-time high levels, created a new high level on the weekly time frame and even on the daily time frame, and now we're starting to pull back a little bit more. And now this is a few minutes, 15 minutes or so before Powell speaks. I'm just going to skip here on the 5. You got the 15 close. We're coming back down a little bit deeper. Close bullish. Great. Are we going to break these highs? Ideally, I want to see some sort of a bottom wick being formed here first. Deeper corrective move. Now Powell is speaking. So this is the volatility that we're going to see in the markets as he's answering these questions, as he's delivering that FOMC statement as well. All that volatility, you're going to see the market reacting to that. This usually tends to be one of my more favorite events to trade as well, because you get to see that massive volatility in real time as he's answering these questions. So a lot of times what I'll do is open up YouTube on one screen and then also have like his speech going and things like that on one end, and then I'll see the market on the other screen. It's insane volatility that you can also watch.
Yeah, it's wild to watch that.
Yeah.
Never seen the candlesticks jump so much.
Look at all that massive rejection. And then if this candle closes bullish, then, you know, we're waiting for these highs here to be broken and then potentially looking for an entry then. Because that is already giving us, across all these different time frames, confirmation of bullish momentum. What we also have to think about is that we're sitting at all-time high levels, and so when you're placing your TP, there's really nothing to refer back to onto the left side. So you have to be a little bit more careful. In that case, I just like to go for that 3-1, 4-1, 2-1 risk reward, mostly 3-1, especially putting a heavier emphasis more on the candlestick closures and the volume that we're getting, and if we're actually getting good volume. So you have 3 minutes, massive liquidity grab, pushing up, we're breaking previous highs, just being a little bit more patient, because even if you take an entry on this candle, your stop loss is going to be extremely wide. So we'd rather wait for this candle to close in the next 2 minutes, and then if the next one can break highs, we take an entry on that.
Vijay, if you were still in the trade, would you adjust your stop loss at this point, or would you wait for the next candle before you make any adjustments?
I would wait for the next candle before I make an adjustment. I would want to see where this candle closes. So if I took an entry somewhere down here, I would have taken partials as price was starting to pull back down, and then I would have kept, you know, however it is, and then adjusted my stop loss or trail my stop loss or anything like that when this new candle starts forming. We're starting to break those
Thank
highs.
you.
Yeah, for sure. Let's come here. That's too close, so I'm gonna wait for a bit of a fluctuation. I would want price to pretty much come a little bit closer here so we can place our stop loss here. Otherwise, I would have to keep it at the open candle, which is very dangerous because the price is going to keep fluctuating, so it will take you out. So I'm waiting still, being a bit more patient and looking for better entries. So if not this 5 minute, maybe the next one. But we know that there's a lot of good volume here. Just do next bar. That would be too wide of a stop loss again, so we're going to do next bar. Let's see if this candle can break highs. Alright, let's come in with a buy. Yeah, it would want me to place it somewhere here, so I wouldn't be comfortable doing that. So either I come in with a bit of a higher risk at 3%, or I pretty much let this one be because we're getting close to pretty much market close here. Anyways, we're in the middle of the session. So at this point, there would be kind of a personal preference or a decision that you would make. I don't want to place a stop loss right in the middle of a candle, an open candle. We've already taken a pretty good trade in the morning. We're already up, 4%. Plus, we have recouped whatever loss that we had from the previous day. So at the moment, that's kind of the decision that I would make where, I'm going to skip over to the next day or wait for the next day and then see, if we can take better entries there. But interest rate wise, there's already a lot of volume, great opportunities for my risk management style where I like to keep a tighter stop loss. That's not something I would be comfortable with. So, pretty much at this point, I would make the decision that I would be done for the day because we're already getting out profitable. Right, but we can still watch what happens here. So same thing here, price is pushing up. It would have told me to do the same thing, which is place a tighter stop loss, where the candle is open. So that's pretty much it that I would be doing for this day, and then we're done because now you're about to get a market close. So I already skipped, as you guys can see, so it went from like 13 to 15, so now it's moving into Asian session. So I would be done at this point, and we're pretty much good. Like, we already traded in the morning, we got a 4% increase, and then we're going to continue going on to Thursday and then look at whatever is happening on Thursday. And we're going to do that next week because obviously every week we're going to take it one day at a time, and I'm trying to make it as realistic as possible instead of just skipping to the next day and then trading that today as well. That's going to kind of mess up for some people, the patience aspect, the risk management aspect as well. But I hope this is helpful, how you can still take advantage, right when the market opens up. And it's kind of giving you guys a perspective into all the different factors that also going into being able to catch the volume, but also being able to catch the trades and everything like that. If there's any particular questions, anything in particular that you're kind of struggling with and you want us to go over, let me know. But pretty much I'm keeping in mind all the questions, all the concerns that I've been hearing from majority of the traders. So if there's anything extra, let me know. But yeah, that's pretty much it for today's session. Any questions before we call it a day?
I wouldn't say particular question. I just want to say thank you, VJ. Like, this was one of my concerning things or place where I was kind of confused of, like, if we don't have any historical data to kind of match with, then how do we trail our trades, right? Like, if it's breaking all-time highs, how do I validate this every single time? So I think with this session, that kind of cleared up all my questions and my concerns. So thank you.
Yeah, for sure. I'm glad. All right, so I will see you guys next week around the same time for the next day. So we're